Hello guys and welcome to Hakman Traders. In this video I'm going to be showing to you guys how to avoid losses when the stock market is going down because of some external news. Because of some bad news, there are times when the stock market is going bad because of some of the external news that have a negative impact on the stock market. Due to which, due to these negative news, in our surroundings, it affects the companies in the stock market that are listed in the stock market. It also affects the stock market itself, and it also scares the investors to not invest their capital, or to hold their capital in that stock for a long time. So things like these happen. So let's get started on how to avoid big losses when there are negative news in the stock market. So let me demonstrate here. First of all, let's, where is it, right here. Now as you can see that this downtrend was due to the impact of the COVID-19. Now as the from this area, as the stock market was going down, what you can usually do to avoid losses is that you will have to keep your ears open to for the news. You will have to hear the news of what's happening in your surrounding. You will have to be alert of those news. So as the COVID-19 hit the world, lockdowns were imposed, the businesses were shut down, many of the things happened. Due to this lockdowns and this closing of the businesses, what usually happens is that it scares the investors of not to invest in the stock market, or not invest their capital in businesses. Why? Because businesses were going down, most of them got bankrupt, and due to those, some of them were holding their cash, and now you can see that to avoid losses in this case, what you can do that is, as you can see that as the stock market is going down, you will have to pick up a certain amount of stop loss that you feel comfortable that this would be my stop loss, and if it reached this point I am going to sell my stock. This is usually called risk management. So you will have to do risk management uh, in this case, because risk management is the only way to avoid loss in the stock market. Either not to invest your capital, if you haven't invested, then do not invest in times like this. But if you did invest, then hold that stock uh, hold that stock up until it reaches this stop loss. So as it reaches this stop loss, sell your stock at this level, because you can see that after that it hit a massive fall. So you can see that this fall happened due to that impact. So what you can do, so you will have to you there is only one way to avoid that fall, is only by calculating your risk margin. So by calculating your margin, you can avoid this downfall, and you can avoid this downfall and trade normally. Besides that, so by avoiding this downfall, you will have to calculate your risk management. Now there's the method that I use to calculate risk management is, let's say I use the percentage method. So I use what is it yes, let's say if I want to calculate point the 5 let's say I want to sell my stock at a 5% loss. So I would calculate 95.95 multiply share price. So what is the share price? Let's take the share price of this area. It is 22.31. 22.31. So I'm going to sell my stock at sell my share at this price. So let's calculate it. 0.95 multiply by 22.31 equal to 21.19. This is the method that I use to calculate to calculate the risk margin, because it is the easy way to calculate the risk margin, and it also gives you a clue that at how much price you will sell your stock and how much would be your loss at this stage. So there's also another method to use for the calculation of risk management. This is another tool to calculate your risk management, risk margin. So last time I set my stop loss at this level. Now it is 7.63% loss. You can see at this area. This was my stop loss, and this is the amount of stop loss that I've calculated, because you can see that it is the same area that I've used. You can use this tool. This is a very easy tool. It doesn't require the mathematics just like I've used previously. It only requires you to use this to drag these and adjust this according to your needs. Now this is the profit side and this is the loss side. Now for profits I want to calculate it like this. Now again let's do it at this area. You can see that it does not show any profit. Yes, right there, a little bit of profit. It shows a little bit of profit at this area. You can see that very small profit. That now this is huge profit. This one is, so this is also a great tool to use for to calculating your risk margin. You can see that, as I've discussed, that calculating your risk margin is the only way to avoid losses in the stock market. And there is one more thing. If the news is still negative news is still floating in your environment, that's bad for the stock market. The news that is bad for the stock market, the news that is related to a single company or many companies, the news that will have a negative impact on the stock market, then do not invest at that time. Hold your cash and invest only when the news is good, and when you hear that the stock market is now going to be fine. So only in that cases you can invest your money, and you will be more profitable by investing in times when the stock market gives you returns and it shows growth. It is affected mostly, the news is mostly related to sometimes economic growth or political news. Both of these two compromise in this contribute in the uptrend, in the bullish or bearish market of the stock market. So you will have to keep yourself alert of these news and trade accordingly. And that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.